Good morning, everyone. I'm Catherine Ross. I am here on the floor of the NYSE with Jim Cramer. Jim, I want to kick it off by talking to you about your real money piece from this morning. Now, you called for a 500-point move in either direction.
Yeah, well, I don't like the fact that this market's up so much ahead of the Fed. And it's a lot of the generic names. It's the Home Depot, McDonald's, which means it's all programmed. So the reason I say up, down 500 is that this is all programmed now. Can you imagine what will happen to the programs then? The market's so thin that the programs matter, with the exception of the oil and the banks. Those can't get out of their way. It really is amazing how bad the banks are. Oil, as I already did the mea culpa when it came to it, I urged people to go to my incredibly long conference call where I talked about what went right and what went wrong in 2018. And I did talk about how oil was bad. Citi's come all the way back down. JP Morgan's come all the way back down. It's important to point that out.
Now, I want to talk to you more about the Fed's decision because that is the biggest thing in the market today. We don't know what's going to happen.
No, we don't. And, there's some people who I regard as mouthpieces for the Fed who are saying, listen, he's going to talk about only having to do one or two next year. If he even says that, if he even says what he's going to do in 2019, then the market's going to go down 500. Okay? I would sell it down 500 if I was a hedge fund. You can't have that. What he needs to say is if the data says that its economy is strong, we'll take action. If the data says it's not strong, we'll let things go. Maybe we even have to take action. That's what a prudent person would do. See, the Fed is caught. They have all this methodology and all this PhDs, but they have no common sense. Common sense dictates that if you think that things could be slowing, you say, I'll wait. Let's see what the data says. That's common sense. They are rash. They are insensitive. And they are imprudent. These are things that are obvious to us who do not have a PhD in economics or not part of their cabal. And it is rather amazing to me that only in their world, where I regard them as being inferior in terms of their research, inferior in terms of their homework, only in their world would you be so doctrinaire as to be able to forecast in this environment, with this president, with this situation with tariffs, with this weakening environment in Europe. Only a fool would say we need to do two next year. That is the height of your rationality, and it is, I'd say, reckless. Okay, the word I would use is reckless. That's why the market would go down 500, because you have a reckless Fed. Is it a runaway Fed? Conceivable. Runaway Fed, perhaps because it feels pressured by Trump, which is so wrong that he does that. But what I'm calling for is rationality. And Catherine, if they don't give us rationality, the market goes down 500. And the Home Depot of $2 goes down $5. Okay, I'm just looking at the tape. IBM $1.64, that goes down $3. J&J down 38 cents. J&J goes down to 125. So I just warn. Now the Fed doesn't listen to me. They didn't listen to me in 2007. We could have avoided a recession. Now instead, I was like the most ridiculed guy of the era. It's really hysterical that the Fed and Jon Stewart ridiculed me. I was like, I hate to say it, but I was like the only guy who was like right, which is really embarrassing. Even the Bear Stearns things, it was about whether I did a lot of work at Goldman. If something happened at Goldman, I can give you insurance so your deposit is safe. You had to buy insurance for it. It was kind of the instance of what I was talking about. But I became the object of tomfoolery, and all I can say is they're going to do it again. They're going to get it wrong if they don't listen to me. Now, who am I? I'm just a guy who speaks to more CEOs than anybody. Now, do the CEOs lie to me? Why would they lie to me? I will hammer them. Who wants to lie with a guy who's done 3,000 shows, who's got a platform, and will just eviscerate you if you lie to me? So they tell me the truth. And the truth is that things have gotten weak. So the Fed should be prudent. I'm not saying, listen, we just saw today that cat's up 3, so we got to take action. They just need to be prudent. And if they're prudent, Catherine, we're going to go higher.
I do a weekly podcast with Martin Bakardax, our London bureau chief, who you work closely with.
I love.
Yeah, and we were talking. He does talking
the day with me.
Yes, he does. And so we do trading strategies every week. And
I encourage people to watch.
And one of the things that we talked about the last week was the fact that the Fed, it's not about the decision in this case, it's more about what Jerome Powell says.
Yeah, well, because we want rationality and reason, not impudence or something that's just rash or reckless. Now, just because you put a suit on and you're a certain age and you've done a lot of banking does not mean you can't be reckless. Was Goldman Sachs reckless with Malaysia? Yes. Should they have been more observant? Yes. So bankers can be reckless. The Fed can be reckless. They raised in 37. They raised over and over again when I was telling them that the housing market was peaking. And let me say, who am I, okay? I mean, I know this is going to sound ridiculous, but I'm someone who would do a better job at the Federal Reserve. And believe me, there was a circumstance where it would have happened, and I would have been proud to serve. It is amazing to me that you're not allowed to criticize them, because Trump's not allowed to. I can. What are they going to do? Call Mama? Call Mama. I'd listen to her. She passed away 35 years ago, so it would really be quite revelatory if they could get that done.
I'd be pretty amazed too.
Wouldn't that be something?
It would be
She was an angel, but they'll never write a book about her. It's actually from Nixon.
Now, I also want to talk to you about stock of the day, which we just mentioned.
Yeah.
It is Micron today. Now, they released earnings yesterday. What were your thoughts?
I don't know. I mean, I was praying the last time that they would take down numbers, or they'd say they'd give you an alternative universe, that if we go, I mean, one of the things that happens with when you have tightness, what they do is companies double order to get the DRAM so they can initiate their product. The moment that last factory comes on and they go past equilibrium, then there's the glut, then pricing just cascades down. Cascade down for DRAM, but not as bad as it is for flash, which is really awful. So therefore you had this incredible situation where, this is great, Catherine, people thought that it was incredibly cheap at 60 because it was at 4 times earnings. 4 times forward earnings. But the forward earnings have been cut in half from what people look. So therefore it turns out to be not that cheap. And that's what happens. That's what happens with a commodity, whether it be linerboard, where we had to take a bad hit on WestRock, or whether it be DRAMs. These are places where you can put up factories very quickly. There's nothing proprietary about DRAMs. Don't let them tell you there is. I mean, you got Applied Materials and you got Lam Research making the equipment. Everybody can buy it. They can buy it in Tokyo, they can buy it in Taiwan, they can buy it here. And so what happened is that there was just way too much supply. All that double ordering has meant it so there's a big inventory issue, not unlike what happened with NVIDIA and Cryptomania. And what really was, I think, most worrisome was they said 2019, second half, is when they'll be out of problems, not unlike NVIDIA said it's going to take several quarters. In the meantime, they are going to continue to buy back stock, and they're going to delever. So it's not a total loss. It's just that the history of Micron is to take boom and then to go boom, but you don't go boom down to here. So it's kind of a boom situation.
I like that, a boom situation.
Yeah. And by the way, how about this Winter Village? I know you went to that, right?
I did, yeah.
How was that?
Great. I loved it.
What,
I thought it was great.
You
I
skate?
didn't skate, no.
Skating's
I'm not
hard.
a big
Skating's very hard. Underrated in terms of difficult skill set.
Definitely. Oh,
Bank
yeah.
of America, there's a stock that likes, sometimes I used to say at my old hedge fund with Karen Cramer, that stock likes to go down. It likes it. It likes it because we used to personalize everything. American Express likes going down. And of course, they don't like, the people who run it don't, but the stock itself, she always personalizes it.
It has a mind of its own.
That stock likes going down. And Bank of America, it likes going down. Citi loves going down. Loves it. It's like, wow, I want to go down today. If you personify, it's like, whoa, today's a good day to go down.
Yeah. Meanwhile, everyone else is like, please don't go down.
Yeah, no, but those people don't listen to people. It's kind of like the Golan. I'm not listening,
Yeah.
I'm not listening. That's Bank of America stock. I want to go down today.
All right, Jim, before I go,
Yeah.
I just want to quickly reiterate to people that the biggest thing to do today, and with your column, I think this is so important, that real money, you say buy, and that's
On the down
important.
500 buy, because what'll happen is we'll be the most oversold we've been since February. This is in the S&P oscillator, and we'll get a bounce.
And then I also want to point out that...
He can get a bounce if he says it right. Look, if he's not rash. By the way, you know what's so funny? There are people saying right now, Cramer's calling him reckless and rash. It's like, yeah, but why not? I mean, if we're willing to say that a football coach is reckless or rash, why can't we say the Fed? They're equally not elected.
And then I also want to point out that on Action Alerts Plus, you're going to be giving the members the stocks to
Oh,
buy.
yeah. Jeff Sev and I coordinated and met this morning. By the way, we're kicking ourselves again about Lilly. Listen to that conference call. Join it, trial it. Hey, I'm pouring my heart out to this damn thing.
Exactly. So if you haven't already subscribed...
Jay, listen to me, okay? No harm in being rational and prudent. No one ever got hurt being rational and prudent.
It's true.
All right? Got me?
Yeah, I got
Okay.
you.
Thank you.
All right, so you can subscribe at Real Money or ActionAlertsPlus.com. I'm Catherine Ross with TheStreet. Thank you for joining me, Jim. It's always
You
a pleasure.
betcha.
We'll see you guys tomorrow.